Welcome back to Wealth Pathway, a deep space prepared only for the few who can see through the fog. Before today's show begins, I ask you to first forget all the fragmented information you've seen from news headlines. Forget those shallow predictions from so-called analysts about this quarter's price fluctuations. What we're going to talk about is an imminent wealth annihilation and rebirth triggered by the irreconcilable contradiction between the laws of physics and the fiat currency credit system. We are about to enter the logical endpoint where silver prices break through $144. This is not just a prediction, it is the most profound open secret of our era. Have you ever thought about a logic when a substance is crucial to the continuation of human modern civilization, but its price becomes so expensive that this civilization's most advanced industrial system can barely afford it? What will happen to the world? This is the silver paradox I want to share deeply with you today. Silver, this metal that has long been seen as gold's vassal and jokingly called poor man's gold, is undergoing a paradigm shift from industrial raw material to a top global strategic asset. In the grand narrative of the periodic table, silver possesses the highest electrical conductivity, the highest thermal conductivity, and the strongest reflectivity among all metals known to humanity. This means that in the underlying protocol of the physical world, silver is an insurmountable absolute benchmark. When you try to reshape the sovereign energy landscape through green energy, you'll find that whether it is the conversion efficiency of photovoltaic power generation or the response speed of electric vehicle powertrain systems, everything ultimately hits a physical wall made of silver atoms. The logic is now undergoing a dramatic shift. Silver is no longer a decorative trinket in jewelry boxes. It is the ticket to the era of energy sovereignty. And the supply of this ticket is already on the brink of running out. Let's start with the desperation of the industrial world. If you look closely at the cost structure of the global photovoltaic industry chain, you'll discover a disturbing phenomenon due to silver price volatility and expectations of long-term supply shortages. The entire industry is going through a struggle known as thrifting. This so-called thrifting sounds like a wisdom-filled term for technological evolution, but peel away its shell, and you'll see it is actually the industrial world's helpless compromise when facing resource scarcity. PV giants are deploying their top engineering forces, trying to maintain profit margins by reducing silver usage on every single panel, even attempting to substitute with base metals. But this is where the paradox becomes fascinating. The laws of thermodynamics never accept any form of lobbying. You can reduce silver usage, but the cost is lower conversion efficiency and shortened product lifespan at a time when the whole world is engaged in a green sovereignty arms race. A slight drop in efficiency means hundreds of billions of dollars in long-term energy losses. This process of thriftification actually proves in reverse the extreme preciousness of silver. When an industry starts being forced to change its physical structure because it can't afford it, the signal it sends is not silver is no longer important, but rather silver has become scarce enough to shake the very foundations of the industry. Currently, industrial silver demand is no longer just rigid, it is a dead knot. On the supply side, we face an even harsher reality. Silver is, in the vast majority of cases, a byproduct of lead, zinc, and copper mines, which means that even if the silver price doubles, mining giants cannot simply expand mines just to obtain silver, because doing so would cause other base metal markets to collapse. This extremely low elasticity of supply determines that once silver prices break through the critical point, their trajectory will no longer be a slope, but a vertical step jump. Analyst Michael Liebreich put forward a highly penetrating concept. He believes silver has entered a new reality. In this new reality, silver's price ceiling from the past few decades is rapidly disappearing. In the old narrative logic, silver was trapped in a fluctuation range of $20 to $30, its value suppressed by massive short positions in paper contracts. But under the new reality, this suppression is failing, because physical silver inventories are being drained at an unprecedented pace. When we talk about physical inventory, I am not just referring to those standard silver bars in New York or London warehouses, but the physical loss that has been solidified in hundreds of millions of photovoltaic panels and cannot be recovered. Silver is the only precious metal that is almost consumed rather than recycled in industrial use. This irreversibility from inventory to consumption is pushing us toward a historic moment. If you think $144 sounds like a distant dream, then please join me in revisiting 2006. In that year, the global base metals market experienced an upheaval worthy of the history books. The protagonist back then was copper. The underlying logic at that time was strikingly similar to today. China's magnificent urbanization process created massive rigid demand for copper, while global mine capital expenditure had been lagging for a long time. During that period, all the experts were predicting price corrections, and all the industrial users were complaining about costs being too high. However, after breaking through historical highs, copper prices demonstrated a spine-chilling one-way movement capability, completely ignoring so-called resistance levels, until it reshaped the global cost baseline. Silver right now is standing on the eve of the copper price explosion of 2006. Moreover, the logical forces driving silver are 10 times more powerful than copper's 20 years ago. Back then, copper demand mainly came from construction and power grids, while today's silver demand comes from a fundamental paradigm shift in human civilization, the comprehensive transition from carbon-based energy to electricity-based energy. In this process, silver is the only irreplaceable medium. When this uniqueness collides with scarcity, combined with the accelerating inflation of the global fiat currency system, $144 is no longer a prediction, it becomes, to some extent, destiny. We have to talk about the true intentions of big money. At Wealth Pathway, we focus on those invisible hands that control the flow of global assets. UBS Group, long known for being steady and even conservative, recently pointed out explicitly in their internal analysis that silver prices have strong potential to hit triple digits. At the same time, a report from Bank of America expressed their fascination with this metal even more bluntly, saying, "We like gold, but we love silver more." Why are these top bankers releasing such strong signals at this point? Because they know very well that the gold-to-silver ratio is at a ridiculously high historical level. In humanity's 5,000-year monetary history, the gold-to-silver ratio usually stayed between 1 to 15 or 1 to 20. But now this number hovers around 80 or even 90. This means that compared to gold, which is already at historical highs, silver is a severely undervalued wealth basin full of explosive rally potential. The deeper logic lies in the rebalancing of commodity indices. This sounds like an extremely tedious technical operation, but it is the key lever driving price fluctuations. Those giant pension funds and index funds managing trillions of dollars conduct an automatic adjustment of asset ratios every year. When silver's industrial demand and investment value start being rediscovered by global mainstream capital, this rebalancing operation will form a massive buying vortex. Although during this process, short-term volatility and technical selling pressure will scare off those mediocre investors. In the eyes of long-term thinkers like us, every pullback is accumulating energy for a more intense squeeze. This is exactly what I want to emphasize to the Wealth Pathway audience. Price volatility is punishment for the mediocre, while the rigor of logic is the reward for the visionary. When silver prices are in the so-called stable period, most people turn a blind eye when it starts accelerating upward, and industries begin panic-driven thriftiness. Most people start hesitating, and when the real surge arrives, when the price rushes toward $144, most people will become victims left holding the bag at the top. But for those who can now read the desperation behind thriftification, who can read the historical echo of 2006, the current fog is actually a doorway. The current silver market still harbors an explosive point rarely mentioned by mainstream media, the great migration of global physical inventory. If you carefully examine the inventory data from COMEX and the London Bullion Market Association, you'll discover a shocking fact: massive amounts of physical silver are draining from traditional Western vaults. Where has this silver gone? The vast majority of it is flowing to manufacturing centers in Asia. This transfer of physical chips means the Western financial system's pricing power over silver is being substantially weakened. When one day in the future, Western paper contract holders want to redeem their physical silver, only to find the vaults empty, that will be the most violent short squeeze in human history. At that moment, silver prices will no longer be constrained by any traditional valuation models. And $144 might merely be the starting point of that moment. We need to understand this dual nature of silver. It is the blood of industry and the bulletproof vest of finance. During times of peace and rapid development, its industrial attribute dominates, while during periods of geopolitical turmoil and uncontrollable inflation, its financial hedging attribute will fully awaken. When these two attributes converge around 2026, we will witness a perfect storm. The industrial sector is trying to break free from silver through technological means, but in reality, the harder they try, the more silver's scarcity value is pushed to the extreme. This paradox of being too precious to use is essentially a war between humanity's greed for cheap resources and the scarcity of physical reality. And in this war, the laws of physics have never lost. $44. This figure is the logical result of inflation adjustment based on silver's 1980 historical high. If you consider the astronomical expansion of global money supply since 1980, you'll find that silver at $144 is actually cheaper than the $50 back then. It is not expensive. It is that its true value has been distorted for so long due to fiat currency pricing. When this distortion begins to self-correct, the process will inevitably be violent and full of impact. We don't predict tomorrow's opening price. We only analyze future inevitabilities. This round of silver's rise will be an opportunity for asset class reshaping. Those who can restrain their fear at this stage, see through the frugalization scam, and follow top institutions in positioning physical assets, will take the initiative in the future era of $144. This is a story about foresight. Most people spend their entire lives chasing opportunities that are already well known to the masses, while true wealth always lies hidden in those unsettling paradoxes. When the whole world is discussing gold's historical highs, please look down at the silver that flows quietly on industrial assembly lines, yet is increasingly depleting. It is brewing a tsunami powerful enough to shake the global financial order. Silver, this forgotten, underestimated metal that the industry has even tried to economize away, is now approaching the most glorious moment in its 5,000-year history. $144 might just be one chapter in this grand narrative. Thank you for coming to Wealth Pathway. In this noise-filled world, we're dedicated to providing you with a calm, rational, and logically grounded, deep perspective. If you are eager to master those wealth codes unknown to the masses, if you are willing to stand on the side of the smart minority, please follow our in-depth analysis. We don't suggest you blindly follow along. We suggest you think independently. The silver paradox is already on the table, and the tickets are decreasing by the second. This is Wealth Pathway. See you in our next video.